Portugal's trade deficit expanded to 2.80 billion in October 2025, a slight increase from 2.70 billion in October of the previous year. This movement in the trade balance was primarily driven by a 5.2% decline in exports, significantly impacted by a substantial 42.5% decrease in the export of fuels and lubricants. This was largely attributable to the shutdown of units at the country's national refinery. Additionally, exports of industrial supplies fell by 7.3%, mainly due to reduced chemical exports. There was also a notable reduction in exports to the United States, which plummeted by 42.6%. This drop was heavily influenced by tariffs imposed on pharmaceuticals and transactions related to contract manufacturing that did not involve a transfer of ownership. When excluding these specific transactions, the decrease in exports was more moderate, registering at 15.4%. On the import side, there was a smaller decline of 3.0%. Purchases from Brazil saw a steep fall of 87.9%, predominantly due to reduced crude oil imports. Conversely, imports from China increased significantly by 29.8%, with heightened demand for fuels, lubricants, and industrial supplies leading this rise. Over the first 10 months of 2025, Portugal recorded a trade deficit totaling 26.9 billion, up from 22.7 billion during the same period in 2024, highlighting the widening gap in the country's trade balance. The material has been provided by robotfx.org.